Your bank is making thousands of dollars off your money right now and paying you almost nothing for the privilege. Not a glitch, not a mistake, a business model. You check your savings account. You've got $10,000 sitting there. You feel pretty good about that. Responsible, safe. Then you notice the interest you earned last month. $3.80. $3.80. You go back to your coffee. You don't think much of it. That's just how banks work, right? That's what they're counting on. By the end of this video, you're going to know exactly how your bank makes money off your deposits, what fees are silently draining your account, and most importantly, the specific moves you can make right now to stop it. No fluff, real numbers. Let's get into it. Here's the thing. Most people think banking is just a service, like a storage locker for your cash. Neutral, safe, boring. But your bank is a business, and you are the product. The difference between people who build wealth and people who just move money around, the first group understands the rules of the game. Today, we're pulling back the curtain. Right now in 2026, the average savings account at a big national bank pays you about 0.38% APY. That's the national average. But at the largest banks, we're talking 0.01% to 0.50%, basically rounding to zero. Meanwhile, that same bank is lending your money out at 7%, 9%, 18% on credit cards. The gap between what they pay you and what they charge borrowers, that's called the net interest margin, and it's how banks print money. Here's what that actually means in dollars. You've got $50,000 sitting in a standard savings account, earning 0.30% APY. You make $150 a year. That same $50,000 in a high-yield savings account at an online bank, earning 4.5% APY, earns you $2,250 a year. That's $2,100 you left on the table every single year, just because you never switched. Actionable takeaway? Open a high-yield savings account today. It takes about 10 minutes online, there's usually no minimum deposit, and online banks consistently pay 4 to 5% APY right now because they don't have expensive branches to maintain. They pass those savings to you. In 2026, the average monthly maintenance fee at big banks hit a record high, $13.51 per month. That's over $162 a year just to have a checking account. And nearly a third of checking accounts don't charge this at all, so you're paying it for no real reason. But maintenance fees are just the beginning. The average overdraft fee is $32.75 per occurrence. Miss your balance by $5, $32.75 gone. And it can cascade. You don't catch the first overdraft, you get hit with a second, a third. Out-of-network ATM? Add $4 to $6. Wire transfers? $15 to $50. Paper statements? $1 to $5. Returned item fees? $25 to $40. Add it all up, and the average American household spends $200 to $300 a year in avoidable bank fees. Some households spend way more. Here's the psychology behind it. Banks design their fee structures to be invisible. The charges are small enough that you don't notice them individually, but they add up to a private tax on your inertia. Log into your bank right now and pull your last 3 months of statements. Search for any fee labeled maintenance, service charge, overdraft, or ATM. Total them up. If it's more than zero, because it should be zero, it's time to switch. Credit unions and online banks routinely charge 41% fewer fees than traditional banks, and many charge none at all. Overdraft protection keeps you safe. For years, banks marketed overdraft protection as a feature, a safety net. What they didn't tell you is they were charging $35 every time that safety net caught you. The regulatory landscape changed. and the largest banks were forced to reduce or eliminate overdraft fees. In 2026, major institutions like Citibank have eliminated overdraft fees entirely. But plenty of smaller community banks and credit unions still charge up to $37 per occurrence. Overdraft protection often just means we'll charge you to borrow your own money back. The fix is simple. Opt out of standard overdraft coverage. Your card gets declined if you go over your balance, which is annoying once, but free forever. Or link a savings account as backup, zero cost. We've covered two of the biggest drains, but there's one more move, something almost nobody actually does, that can quietly add hundreds or thousands of dollars back into your pocket every year without changing your lifestyle at all. We'll get to that in a minute. Here's something banks know and rely on. You're loyal. You've had the same checking account since college. You don't look around. You don't compare. Banks call this deposit stickiness. It's in their internal models. They know that the longer you've been a customer, the less likely you are to move your money, even if they're paying you a fraction of what you could earn elsewhere. So they don't raise your rate. They don't call you and say, hey, you could be earning 10 times more somewhere else. They just quietly keep the spread. The customers who get the best rates are almost always the newest ones, the ones who shopped around. Loyalty in banking doesn't get rewarded. It gets exploited. Set a calendar reminder every 12 months to compare your savings rate against the current top high-yield savings accounts. Takes 10 minutes. Could be worth hundreds of dollars. If you've made it this far, you already understand your bank's business model better than 90% of the people walking into a branch today. That knowledge alone is worth more than any single rate bump. Let's look at this from the other direction. We've been talking about what banks take. Let's talk about what they're actually offering you that most people never use. Banks are not entirely the enemy. There are tools inside your existing accounts that most people ignore, and those tools can save real money. Balance alerts. Almost every bank has them. Set an alert for when your balance drops below 500, 200, whatever your buffer is. You get a text or notification before you overdraft, not after. Free. Takes 2 minutes to set up. Automatic transfers. Set up a recurring transfer from checking to your high-yield savings every payday. Even $50 or $100. You never see it, you never miss it, it builds. The psychology here is powerful. What's automatic doesn't require willpower. Right now in 2026, one-year CDs are paying around 4.05% to 4.75% APY. If you've got money you won't need for 6 to 12 months, a CD locks in that rate, regardless of what the Fed does next. You split your savings across multiple CDs with different maturity dates, so you always have access to some cash while the rest keeps earning. Treasury bills. T-bills are paying 4.20% to 4.50% APY right now. And here's the part most people miss. That interest is exempt from state income tax. If you live in California, New York, or another high-tax state, the after-tax yield on T-bills is often better than a savings account paying the same nominal rate. Here's what all of this comes down to. Financial inertia is the single most expensive habit most people have. Not overspending, not bad investments, just not looking. A person who has $50,000 in a big bank savings account at 0.30% APY pays $162 a year in maintenance fees and eats 2 or 3 overdraft fees a year. They're losing roughly $2,300 to $2,500 a year compared to someone who simply made different default choices. Not smarter, not richer, just more intentional. Over 10 years, that's $23,000 to $25,000 in money that should have been theirs, gone to fees and lost interest. That's a car. That's a down payment on something. That's years of compound growth erased before it ever started. The bank didn't steal it. The bank just offered bad terms and bet that you'd never read them. They were right about most people. You're not most people. Here's everything we covered today. Big banks pay 0.01% to 0.50% APY on savings, while online banks pay 4% to 5%. Same money, wildly different outcome. The average monthly maintenance fee is $13.51. It should be zero. Switch to a bank that charges none. Overdraft fees average $32.75 each. Opt out of standard overdraft coverage or link a backup account. Both solutions cost nothing. Banks rely on deposit stickiness. The longer you stay, the less they pay you. Check your rate every 12 months. CDs are paying 4% to 4.75% APY right now. T-bills are paying 4.20% to 4.50% and are state tax exempt. Set up automatic alerts and transfers. Let the system work for you instead of against you. The gap between the average person and someone who's genuinely good with money often isn't income. It's just knowing where to look. So here's your comment question for today. How much are you currently earning on your savings? Drop the APY in the comments. No judgment. This is how we learn what's actually out there. If this video opened your eyes even a little, a thumbs up genuinely helps more people see it. Make sure you're subscribed so you don't miss it.